Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Gligoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you so much for joining us today. I'm Tammy, the podcast manager, and today on the line, I have the COO of Leafy Legal Services as our host, Jennifer Gligoric, and the beautiful Jennifer has an amazing guest for us, so I will go ahead and pass it on to her. Hey, Jennifer, how are you doing?
Oh, I'm doing great. And I am so happy to talk to our guest today. We actually have a client that referred this guest. And then I did some research and I thought, oh my God, we have to have him on the show. So we are talking to the real asset investor himself. He has invested in over $100 million worth of real estate since 2010. So he's one of our peeps. But I'm very interested because he does ATM investing and storage. So, right now we're all like in pivot, like Ross Geller on Friends, pivot mode. So I am really excited to hear about alternate means of investing and find out from someone who's a guru, who's been on Jason Hartman. He, with one of his summits, which we've worked with before, and just really happy to talk to him. So everybody needs to welcome Dave Zook to the show. Welcome, Dave.
Jennifer, Tammy, thanks for having me on your show.
You're welcome. So let's start out with the basics. So you're there. Is it still quarantine where you are? Because you've got 4 kids. So this must be really fun right now for you.
My wife and I, we talk about this quite often. We are so fortunate. We feel so fortunate that we're not in some big city living in a 3-bedroom apartment right now. We live in the middle of Lancaster County farm country. And so we've got several hundred acres we can roam around on. We got golf carts and 4-wheelers and airplanes and pets, and we stay quite busy. And, we are officially in lockdown, but my office is 3.5 miles from my home. For me, life has been going on just about as normal. In fact, I told someone just yesterday, if it weren't for me watching little news clippings and stuff of what's going on outside in the outside world, I don't know that I'd know anything was going on, because we are quite busy in our manufacturing business, and investor appetite is also quite strong. So I'm as busy as ever.
So let's talk about that. So hopefully by the time this show airs, we'll all be opened up, right? Texas already hasn't been opened up. That's where I'm at. And I have a paralegal. One of my top paralegals is there in Pennsylvania too. So I know you guys are locked down. But eventually we're going to get out of this, but things are going to be changed. So coming from a guru like you who talks to a lot of investors, and from colleague investors to investors wanting to invest with you, what type of pivots are you guys making right now?
So fortunately, we started pivoting back in 2017-ish, 2018. We bought our very last multifamily apartment building in midway, maybe Q3 of 18.
Really?
And so we started pivoting back then, and we, I started getting into self-storage. And one of the reasons was as I saw the bell curve and I started, me personally, it was just sort of a gut feeling on my side, but it was like, man, I think we're much closer to the top than we are at the bottom or even the middle. And, I started looking at asset classes that typically do really well in downturns in the economy and recessions, and self-storage was one of them. And I had a strong interest in self-storage for a number of years, but I was busy and I didn't have a really good entry point. I didn't have a really good team that I could partner with. And so when that opportunity came along in 2017 or 18, I did a lot of due diligence on the team. We ended up doing a deal together, and then we did a whole bunch of deals together. We actually just finished up our equity raise on 11 self-storage units. It was a fund, and we just finished up that equity raise. I think it was around $47 million just about 2 or 3 months ago.
Yeah, we had someone who's big into self-storage, Dan Krzyzanowski, and he's with the guys in Pinnacle down in Texas.
I've heard of them.
And really great guys, real smart, and they know a lot of people in this space. And we talked to them right when Dan was out South by Southwest, the festival in Austin, and it was right before they shut it down because of COVID. And he was talking about he wouldn't have thought storage would be good in a downturn because, you know, nobody's going to lose their house. And then someone else said, yeah, some people will let go of houses. They're not going to let go of that Harley that they you know, spent all their time getting. They're going to keep that storage. They'll downgrade, they'll move. And he goes, it actually doesn't bear out like you think it will. And so they were talking about how great it is.
Not only the Harley, I mean, you would be surprised at some of the stuff that people end up spending money to store. I mean, when you look at, you know, and most people come into the storage space thinking that it's going to be a short-term deal. They think it's going to be, you know, 2 months, 3 months, 6 months. And 3 years later, they're still paying to store their junk. I mean, this is, you know, this is not Harleys. And, you know, and of course, there are Harleys that get stored in some really valuable stuff. But generally, it's not stuff, it's not storage that you would typically think of that you would pay a lot of money to store over a long period of time.
I think I'm about to do it, and I'm a pack rat. And so I don't want to be a hoarder because I've watched that TV show and it really freaks me out. And so I thought, well, but I still may need this stuff. You know, there's this terrible thing. What if I need it, right? Like, what if we do go into the apocalypse and the zombies come and these things that I've managed to acquire like a pack rat over the years come in handy and I can build a robot? Like, there are really crazy things that you think of why you need storage. I know I can't be the only one because you're making a fortune doing this. So,
well, I'm a lot like that. My wife and I are opposites when it comes to that. You know, she's the one that cleans house and throws stuff away, and I'm like, wait a minute, what if I ever have to use that? You know I didn't use it for the last 5 years, but what if there comes a day when I'm actually going to have to go to the hardware store and buy one of them things, and I saw you throw it in the dumpster? So. Yeah, I think most of us struggle with that pack rat issue, but no, it's good for the self-storage business for sure.
Oh yeah, it really is. So let's talk about another thing that you're really great at that I really want to hear a lot more about. So you did multifamily, got into self-storage, but the thing I am very interested in, just because we have a client who just went on and on and on about how great it is, are ATMs. So I thought erroneously that ATMs were all owned by banks. So you had to be a bank to be able to own them. I had no idea that there was this entire subset of investing. So can you talk a little bit, like, how did you figure out about ATMs? How did you get involved with that? And how does somebody else invest in that?
Most people think just like you did. Most people think that banks own them. They have no idea that they are when somebody swipes that card and it costs them $2 or $3, that there's an opportunity on the other side of that for an investor. Yeah. And so, that's exactly what happens. Somebody walks up, swipes their card, there's a $2 or $3 surcharge. That money goes somewhere. And normally there's two different kinds of players. One is a mom and pop operator. Mm-hmm. And then on the other end of the spectrum, you have big hedge funds, private equity firms, public companies, billion-dollar revenue companies, think Cardtronics, some of those. There's never really been, that I know of, there's never really been anybody in the middle. So what we do, what our company does, is we take down large portfolios, could be 5, 10, 15, $20 million portfolios, put them under contract, and then it's my job to go out and find the money. So what I do is I chop them up in bite-sized pieces. I chop them up in $104,000 units. $104,000 gets you 7 ATM machines. We then turn them over to our management company. Our management company, we have a contract with our management company. They commit to 3,373 transactions per unit per month. Okay, so 3,373 transactions per month for your $104,000 unit or 7 ATM machines. And then your portion as an investor, your portion of the $2 or $3 surcharge revenue is 63 cents. So when you run the number, that's $2,125 per month,
Yeah.
or $25,500 a year. What happens is that translates into a 24.5% cash on cash return.
Right.
Now, what you got to remember though, unlike an apartment building or a self-storage facility, your cash on cash return is much higher than your IRR, simply because at the end of the 7-year contract, most of the value of your equipment is gone. So your IRR, your all-in number that really matters when you do a comparison with self-storage and multifamily apartments, is your IRR, and that's 18.6%. 7-year contract, 18.6% IRR. So that's sort of a snapshot of how the business model works. And again, when you look at the value of an institutional grade location, those are locations that mom and pop investors do not have access to. We're dealing with, we own all of the McDonald's in all 5 boroughs of New York City. We own a lot of the Walgreens in the Northeast. We own most of your travel plazas and interstate, the stops along the interstate in the Northeast corridor. So those are institutional grade location. When I talk to
this is exciting me very much. I'm just saying this because really,
coming
from a real estate investor background, it's in location, right? So a location like that, it's not like, I always think of a nail salon that has a little ATM in there and they tell you for tips only. You have to go when you're done and get the tips only. That's not going to be as great of a location. Well, maybe this nail salon because it's heavily trafficked, but not like a McDonald's in New York.
And the important thing to remember in a mom and pop location, and there's nothing matter with that business model. Those guys can make a lot of money. What is important to remember is there was a couple of those guys called me and, we were talking ATM, and some of those guys were down 80%. And I'm like, wait a minute, why are you down 80%? We're like within a couple percentage points, some days up, some days down. And the big difference was these guys were in bars and restaurants.
Oh,
so
yeah.
That's the difference between an institutional location, which is mostly essential. Now, I will admit there's some of our locations are in airports. That's a problem.
Right.
But that's also, that's considered an essential location. So I won't sit here and tell you that every one of our locations is running at 100%. But I can tell you that some of our locations are running much higher volume because there's fewer places to go. So there's more, density in some of those places. Think high foot traffic, grocery stores, delis, those types of places. But we've been hanging right in there and they've been doing really well. And that's the difference. That's the power of having an institutional location over a mom and pop location normally.
Right. Yeah, you don't think about that, but we had a client who had vending machines, and it was a great business, but because he had a great location in doctor's offices. The only problem is right now he experienced the same thing. They were like, oh, this is terrible because now all these ancillary and even some critical things are being put off. So what had been a great location wasn't, but it'll come back. At least that will come back. It's not going to be like that forever, but still it's a scary dip, kind of like the people who were doing short-term vacation rentals, the Airbnb, VRBO, the people with VRBO, fairly happy right now. The people who have Airbnb, furious at Airbnb because of what happened, unless they're in established, mature markets that have been renting houses since the 70s, like Branson, Missouri Poconos and places like that. So yeah, it just depends. The good thing is everything is temporary. This too shall change. But you sound like you were way ahead of the curve. Have you always been ahead of the curve on things like that? And how do you do it?
Oh, I wish. So, I'm a cash flow investor. I discipline myself to be a cash flow investor. I'm also really aware of the tax law. So just last night we had a webinar, myself and my CPA, we had a webinar and we were talking about these net operating loss 5-year carrybacks, teaching our investors how to get the tax money back that they paid going all the way back to 2015. So I love, by nature, I'm a speculator, but I discipline myself to invest for cash flow and for the tax benefits. So, and I'll just give you a couple examples. One, in our manufacturing business, we love to exploit weakness in the market. So let's say in any commodity, you'll have, violent upswings, violent downswings. I mean, most recently think oil, but in our business, in our manufacturing business, we use truckloads, train loads of roof sheeting for building our modular buildings. And so a couple of years ago, we bought just like 50 truckloads of this roof sheeting, and we had it, our warehouses were overflowing. We had it outside. We were storing it outside, tarping it and all that stuff. Well, within 2 years, we were paying around $5 a sheet for this roof sheeting. Within 2 years, we were selling it back to the same people we bought it from. The price went up to like between $14 and $15 a sheet.
Ooh.
So those are the kind of things, and we just did it again just in the last, those opportunities come around every couple of years, and we just did it again the last 6 or 8 months. And right now we're like up to our ears, and we actually build a building to store this stuff in, and all the roof sheeting had to do was go up like $1.50 a sheet, and the building was paid for. So
wow.
we're now there. We're in profitable territory now, because we went from $5.50, $6 a sheet. Now it's up around $9 or $10 a sheet. So all it had to do was move $1.50, and it paid for the entire building and then some. So I love exploiting. When the market gives you an opportunity, I'll give you one more. I don't want to hog up all the airtime, but I'll give you one more, and I love it. That is just lately, when you look at the beef market and you look at the meat packing plants and the slaughterhouses and all that, those places are, for the most part, they're shut down. Well, before that, think about what else shut down. Restaurants shut down. So the market, it's kind of like our oil market. The market was flooded with cheap beef. I got a friend that has a meat stand in Philadelphia at the Reading Terminal Market. And, he gave us this opportunity. He said, look, I'm selling prime fillets, like the big long fillets that are like 2 foot long, and then normally he sells them for, and this guy's really good. He sells them for $23.99 a pound. Right. He's selling this stuff for $10.99 a pound.
Oh my gosh! Like, don't even tell my boyfriend that. We were smoking meat yesterday. We like smoking for a week. Man.
It's the best meat. It's the best meat you can buy anywhere.
Love to hear that.
So $10.99 a pound. I had $4,000 worth of beef in my freezer. It's just, so when the market gives you an opportunity, again, by my very nature, I'm a speculator. I love to exploit that when the market gives you an opportunity to.
When you say you're by your nature, have you been that way since a kid? I mean, just always looking for opportunities, seeing trends. I mean, how did that play out?
I would say from the time I was a teenager.
Really?
I love those opportunities. I'm really conservative in that way, in the way that I invest or spend money. I love that kind of stuff. I love exploiting when the market gives me the opportunity to.
That sounds great. And so you've written a book. You're a #1 best-selling author. Tell us, how do we find your book? Do we just go to therealassetinvestor.com?
You can get it on Amazon. You can send us an email. I think there's some information on our website, but the one thing that changed everything, I was a co-author along with about 25 other folks, but it's a good read. A lot of good stories in there.
Well, we've got to go and see it. Well, everybody, we've been talking with Dave Zook. He's a founder, CEO, multi-mogul real estate investor, the ATM, self-storage guy, you name it. We've been learning a lot of very interesting things that I'm going to follow up in personally. And all these links will be, Tammy will have them for you. So before we go, let's talk a little bit about what's your next big thing that you're working on, just before we start to wrap it up.
So we are working, and have been for the last 2 years, and we've been working on a project down in South Texas, down about an hour and a half south of Dallas, where we're taking coal and we're getting derivatives out of the coal. So think about a giant oven. His oven's probably, 40 feet long, 10 foot high, gets up to 2,000 degrees.
That makes diamonds,
Yeah. So, So we're running the coal at very slow speeds and a high heat. We're agitating, rotating it through this giant oven, and we're capturing, at some point during that process, the coal starts to break down. It releases oils, gases, and liquids. So that product, we're selling it under contract to one of the largest oil companies in the world, and we're under contract. Our oil that we capture from that is, we're selling this product at $162.50 a barrel. So when people think about oil and they're thinking about $40 negative oil or $20 oil, stuff you can't make money with, they're like, wait a minute, how are you making money in an oil? This is a different kind of oil. It's a pharmaceutical grade oil. It's also a key ingredient in cosmetics and skincare. So when you look at cosmetics and skincare, most of those products, the primary ingredient in those products is coal. Same as when you go ahead and hook up to an IV and they put medicine in your bloodstream. Main ingredient in most of those drugs is coal. So that's the product that we're producing. It's done really well. We're getting we're producing well above our projected, above our performa, and it's doing really good. It's a safe way to play oil because, number one, I usually tell everybody, look, the reason you get such aggressive tax benefits from the investing in the oil space and oil drilling is because there's a lot of risk. There's market volatility, lots of price volatility, lots of risk, and lots of risk in the form of drilling. You never know exactly what you're going to get into until you run a drill bit down there and see it, and you spend a lot of money. So we're getting the tax benefits we're looking for. We're getting a really strong, aggressive cash flow in the double digits, well into the double digits. And we're doing it with, probably 10% of the risk. Number one, we're not drilling. Number two, we don't have price volatility because we're under contract.
How do you even know about this? Like, how do you go from multifamily to self-storage and then, ATMs? I get that that's in space, and I'm in the same space. And now you're drilling for coal, for pharmaceutical grade coal that's used in like all this stuff. How do you go from like that to that? Like, that needs a crystal ball to me. Like, are you just reading all the time? Or listening to podcasts, or, how?
I do read a lot, and so there's a couple things. One is I look for people. I look for teams. I look for really good people. So I don't necessarily as much care about the industry, although I do have, I was clearly very interested in the self-storage space well before I got into it. I remember when I was in my 20s, I was hearing about it, and I always had it in the back of my mind that I at some point wanted to get into it. But I look for people, and I'll give you an example of what happened and how I got into the space. I started hearing a lot of good things about my now self-storage partners, people in my investor network. When you start hearing things like, man, I've been investing with these guys for the last 10 years. I did like 11 deals with these guys.
Kind of like how I met you.
Enough of good things. Yeah, I couldn't say exactly like that. So you couldn't hear enough of, and when you hear that over and over and over again, after a while, it's like, you know what? I don't know who these guys are, but I need to find out. And that's sort of, you go down that path and you really hunt for good people.
I love that, because really I have met the best people through my clients, and then even meeting people like you here on the podcast is just, this is going to open my eye. I'm going to read about it. I'm going to think about it. And that's amazing. Go ahead.
And then you got to see, then you got to make sure that it fits in your model. So, what is your model? For us, number one, it's cash flow. Number two, it's tax benefits. So, I was running, and I'm running with a group of dentists and surgeons and doctors and sort of the medical field, and they are the hardest people to protect from the tax side. So I'm an investment and tax strategist. So I'm running with this group, and I see these guys are struggling for good options, because a lot of them are making high six figures, some in the 7-figure range, and some of them are W-2. Well, they got like a very limited, they got very limited options to what they can do on the tax side.
Yeah, I know. So, I was doing physician turnarounds before doing this. I would go in because I had a pharmaceutical sale background at one time, and I dealt with the solo docs. So even though they're bringing in that cash, I was in practices where the nurses were making more than the doctors at some point because their outlay, and they just could not get ahead, because they're not taught to be business people at all. They're taught to figure out how all their friends are going to die and try to prevent that. It's a very weird headspace for them.
Yeah.
So
the reason this asset class, the reason that coal asset class fits so well is because the way we ended up structuring it, and it was very strategic. The way we ended up setting it up was we had these high paid professionals come in and invest alongside of us as a GP. We set up the working interest lease that went all the way back to the mine. And we were able to take the 100% bonus depreciation first year, offset ordinary income. We could offset W-2 income with the tax benefits. I mean, it was incredible. And on top of that, on top of taking 100% bonus depreciation in the first year against ordinary income, you also get a 15% depletion allowance against gross income coming from the product that you're selling.
Golly.
So it's crazy. I mean, it's like the most I've never seen or been a part of an asset class that was more tax friendly than that.
That is like an amazing, and some of this is going over my head. It's just a little bit dinging in of how absolutely beneficial that can be. We could have a whole show just on that, but we're at the end, so we're going to have to wrap up, and I hate it because I have so many questions right now that I want to talk to you about. Okay, Tammy. Well, here we've been with Dave Zook. Tammy's going to have to stop me from talking because I just want to find out so much. I feel like I've got a Solomon type of person here with his imparting so much wisdom. Anyway, Tammy, this is it. You gotta go. I hate it.
All right. Thanks again, Dave, for being with us today. And I will have all of Dave's information and links in the show notes. And thank you again, Jennifer, for hosting for us today. And if you would like to get in contact with us, please email me at Tammy, Tammy, at leafylegalservices.com, and I'll get right back to you. And if you are looking for us on social media or on anywhere podcasts can be heard, we are at Leafy Legal, and that's where you will find us. So hope you are all staying safe and healthy and have a wonderful week. We'll talk to you soon. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.